All right, so here we have another Chapter 8 problem, and this problem is about Carla. And again, we're talking about the formation of a corporation. And so Carla's incorporating her sole proprietorship, and again, she's transferring inventory, a building, and land, okay? And she's getting 100% of the corporation's stock. So remember, that's important. The property transferred to the corporation has the following market value and adjusted basis. Okay. Also, it's important to note that there is a $120,000 mortgage attached to the building and land. And we're given that the fair market value of the corporation's stock is $300,000. Okay? So, standard question, right? So Carla transfers all of this stuff to the corporation. What amount of gain or loss does she realize as a result of this transfer? Okay, not recognize, realize. All right, so let's figure that out. So what do we always have to look at? Well, first, we have to look at the fair market value of what she receives. And we're told that the fair market value of what she receives is $300,000. Okay? Now, what also does she get? Well, she gets debt relief. Right? So the corporation assumes this mortgage of $120,000. So what does she receive in total? Well, in total, her amount realized or received is $420,000. Okay? Now, how do we calculate the gain? Well, we're going to subtract out. I'm going to move my minus sign there. We're going to subtract out the adjusted basis of all of that property. And we know that the adjusted basis was $410,000. So minus $410,000. So what do we have? We have a $10,000 gain, and it's important to remember that this is realized gain, not recognized gain. Okay? So that is part A. So now let's go on to part B. And part B is pretty predictable. This part asks us, what amount of gain does Carla recognize in the transfer of the property? Okay? And so what does she recognize? Well, remember, this transfer qualifies as a Section 351 formation transfer. Okay, so what does that mean? That means she did not receive boot. She has more than 80% stock ownership and did not receive boot. So she has 0 gain recognized. Okay. Now, part C is going to ask us, what is Carla's basis in the stock she receives? Okay. And so remember that basis in these types of transfers is called substituted basis, all right, minus any liabilities assumed by the corporation. Okay, so what was her basis in all of those assets she transferred? That was $410,000. Okay, what liabilities did they assume? Well, they assumed that $120,000 mortgage. So that means that she has a $290,000 tax basis in the stock. Okay. And now the last one is just kind of a thinking question, all right? Would you advise Carla to transfer the building and land to the corporation? What tax benefits might she and the corporation receive if she kept the building and land and leased it to the corporation? Well, to me, what she could do she could lease the building and land to the corporation. The rent would be an expense to the corporation. And it would reduce the corporation's taxable income. And Carla would then get rent income from the corporation. Whether or not she should do that is absolutely determined by relative tax rates. And so for that, we'd have to look at the relative tax rates and decide, is it better for that property to be inside or outside of the corporation? All right, that completes that problem.